All right, howdy guys, Jimmy Song here. Welcome to another episode of Bitcoin Tech Talk Q&A. This is the show where I go through my newsletter, talk about the news around Bitcoin in the past week, and talk about a bunch of other things. Got a great show for you today. We're going to talk about the stock to flow extended model. That article will be our long read and so on. But before I do that, let's take a look at a couple of things that I want to show. First of all, my books are available on Amazon. This is the Little Bitcoin book, which is available in English, Spanish, Portuguese, Kindle, and audiobook. You can purchase this from Amazon, as well as Programming Bitcoin. This is available on Amazon. You can, if you already know how to program in Python, this is the book to get to learn all about Bitcoin. I've had a lot of people that have taken my course that have read this book, and they, you can read the reviews for yourself. Anyway. So we are going to go through a lot of things today. First thing that I want to really talk about, though, is this concept of Velvet goods, and these are really interesting things in economics. As you increase the price on on this particular good, what ends up happening is that there's more demand for it. Now, normally things don't work like that, right? In order to increase demand, you have to lower the price because there's a supply-demand curve. But what's interesting is that money might be one of those cases where it is a velvet good, that the demand goes up as there's more, or as the price goes up. And stocks may be similar and so on. And that's what we're going to look at in the long read today. And this is Plan B's article, Bitcoin stock to flow cross asset model, or what he calls the S2FX model. And we'll talk about phase transitions and all that. But this tweet by Safety Anonymous, I think, really captures a lot of it. I would go as far as saying I think there's no such thing as a velvet good. In my mind, if the demand goes up as the price increases, then you have a different good purchase for a different end. And this might be what we are getting out of Bitcoin, is that as it gets into a particular stock to flow range, it starts taking on different characteristics or meeting a different market need. Now, we don't have that much research into it, and I think we'll see in the long read that a lot of the hypothetical cases in which these phase transitions happen are kind of speculative. But at the same time, there's some good evidence for it in the stock to flow model and the stock to flow cross asset model, which we'll talk about in a bit. Anyway, the key thing about this that I think I want to emphasize here is that this means that there's a particular demand that sort of magnetically draws in Bitcoin price at certain uses. So when it overshoots like it did in the past bubbles, it means that it wasn't as useful at those prices as it was at a lower price. That's why it sort of like goes to a particular level. Now we don't know exactly what the market demand at those prices are. I think we can guess, but what that means is that stock to flow specifically is measuring sort of scarcity, and at a particular scarcity there's an economic demand or a market demand for the asset at that particular scarcity. The next jump to may be shorter or longer than what the halving might be saying. But I mean, if there is one, then the tendency will be that after the halving, the stock to flow ratio will be very different, and it will magnet towards like the next use case. And that's what we really need more research on, and articles written, and just a lot more thinking done about this, because that I think has some merit, and there's some evidence for it, and this is what we're going to talk about. All right, so let's talk about Bitcoin. Amity Uttarwar has been publishing some really informative comics. She's a core developer that is funded by Zappo. Anyway, she's made a couple of cartoons, and this one is pretty cool. This is about what's in a mempool, and she has this. She's not only a talented developer, she has a gift for sort of explaining things in a pretty good way. I told her, like, you know, you write enough of these comics, you should totally publish it in a book. It'll sell like hotcakes. So anyway, this describes a mempool. So what's in a mempool? Well, you sometimes have a parent, sometimes have a child, but there might be parent that's missing in the mempool and so on. If it's missing a parent, then we call them orphans, and that's where the term an orphan transaction comes from. It's a transaction without a parent, so you don't know where it came from, and you don't know the parent, so you have no way to put it in the ledger and so on. When you know, basically. And you know, here's another one. This is about child pays for parent. Essentially, it's the high fee. If you have a low fee transaction, the child can pay with a higher fee, and that's the miner gets to mine both of them, but you can't mine the child without mining the parent. So it gives it's a way to pay for a low transaction elsewhere. So lots of little things like that are in this in this comic. I really like what she's doing here. I think you know, any time. Well, first of all, you should be following her if you're not, and yeah, you should go and you know, read more about this. It's very informative, and she definitely knows what she's talking about, and she's a badass developer. All right, so anyway, good stuff. All right, so the next thing I want to talk about is partially signed Bitcoin transactions, because they have a problem. The fact is, they can get really, really large, especially when you have a lot of signatures and so on. Potentially with Schnorr, it could get really, really gigantic, because you could have a partially signed Bitcoin transaction that's, you know, like 100 of 100 or something like that, and you need 100 signatures. So, you know, how do you transfer them? Especially if you have a cold wallet. If you have like a wallet that that's air gapped or something like that, which means that no device can really communicate with it. You have to use like images or something like that. Traditionally, the way that you're supposed to do that is using QR codes. Unfortunately, QR codes just aren't big enough. So Christopher Allen has this issue open on his Blockchain Commons air gap signing, talking about the various issues, and you know, you can see Peter Willa is commenting on it and so on. But what and Bob McGrath here. But you know, the idea being, how do you transfer that much data? And they have some cool ideas, like animated QRs, for example, a QR code that changes every few seconds, and then you grab all the data from that one particular image. So it's kind of like using video to transmit data efficiently without using some sort of a native digital connection, which might compromise the device. All right, so really cool stuff. I encourage you to look at that if you're interested in hardware wallets and so on. Blockstream has a new release of Explora. So Explora is their block explorer, and this is what blockstream.info runs on. And it's completely open source. And it's useful. You can run it on your own, and you can hook it up to your Bitcoin D node. It uses Electors, which is Block Explorer based on some of the stuff from Electrum. But it's a new release. Among other things, it has let's see. It has the ability to be a backend for C Lightning, which in of itself is really cool. We'll talk about C Lightning in a bit. Also, it has more stats about Liquid, and Liquid is growing like gangbusters at this point. And you know, I think like it's like 9,000 Bitcoin that's in Liquid right now. So all of that is going to be really interesting as well. All right, Glassnode Insights has some interesting stats with respect to how investors are accumulating and holding before Bitcoin's halving. Main conclusion is that most people are accumulating right now, and they're accumulating before the halving, and they're doing it in anticipation of the halving. And there's a lot more diversity of people that are holding. Really interesting statistics, and you can look at more of it. But yeah, I mean, there was a huge interest after March 12th, and that makes sense. All right, Lightning, there's LND and C Lightning both released new clients this week, and you can read all about LND here from engineer Brian Vu, who works for Lightning Labs. LND now has partially signed Bitcoin transaction support, which means that you can sign Lightning transactions, or at least funding transactions and so forth, using PSBT. Lightning transactions tend to be fairly complicated with complicated redeem scripts and so on. There's developer improvements and lots of things like that as well. C Lightning also has some interesting developments. The main one, which we already talked about, is its compatibility with Explorer. So you can now use Explorer as your backend for C Lightning. So that way, you can tell C Lightning, okay, here's my Explorer node. Please just go use that. That way, it doesn't have any third-party dependencies. The other thing that it has is large channel support, or what they call Wumbo mode. If you don't know what the reference is, basically, it was a SpongeBob episode where he had the belt of Mermaid Man, and it's an M, and I think Patrick told him, well, you should try Wumbo mode, turn the M upside down. He's like, I don't think that's right. Later on in the episode, Mermaid Man says, did you try Wumbo? Anyway, Wumbo means essentially, it's an affectionate term for large channels, because Lightning channels have traditionally been restricted. All right, economics, engineering, etc. All right, so Parker Lewis continues to write in his series Gradually Then Suddenly. This one is Bitcoin is Common Sense. And, this is from Common Sense by Thomas Paine, and he likens Bitcoin to that, right? Like it just makes much more sense than the fiat world, which is the Fed is adding balance to its balance sheet constantly, and the dollar is being debased. In that kind of world, essentially, you need something that makes a lot more sense, and that it goes along with this idea of the declaration of independence from monetary authorities and so on. Jameson Lopp has written on memes. This is, I think, his 100th article ever, and this is all about the different memes in Bitcoin. The main thing that was enlightening to me is that Bitcoin sort of lives in this metaphysical information realm, and so do memes. And the idea is that those two things have a connection, and that using memes to promote Bitcoin is sort of fighting in the right arena, if you will. He has a bunch of them, like Don't Trust Verify, Not Your Keys, Not Your Coins, Bitcoin Sign Guy, In Math We Trust, Bitcoin Roller Coaster, 1 Bitcoin equals 1 Bitcoin, Hype Cycles, HODL, Timing the Market, Digital Gold, Internet of Money, Be Your Own Bank, Money Grows on Merkle Trees, Bitcoin Fixes This, Bitcoin Citadels, Morpheus, Geopolitical Implications, The Honey Badger, This Is Good for Bitcoin, Virez and Numerez, Stay Humble and Stack Sats, When Moon, Number Go Up, It's Time for Plan B, Bitcoin User Not Affected, Money Printer Go Burr, Bitcoin's I'm Here to Fix Bitcoin, 2 weeks and soon, 18 months, lost my coins in a tragic boating accident, toxic maximalism, that's what I'm wearing right here, the flippening, don't buy Bitcoin, it's going to crash, when in doubt, all really good stuff. Sad that he didn't put I Am Gentleman in there, but this is Gentleman in there, but what can you do? Gigi has written a letter to friends and family. Essentially, this is an argument for why you really, really, really need to think about Bitcoin in this day and age. And, I thought it was a very well-written article. It talks about, like why it's so important to take some action towards this. That is, start stacking, right? It's much more important to get people to stack than getting them to understand Bitcoin. The understanding will come later, in other words. And, for some people, they need to understand it before they buy it. That's fine. But other people, it's more important just to get them to stack, to get them to do something, to take action. All right. Barry Silbert's Grayscale Investments has been buying up half of all newly mined Ethereum. So this is where most of the Ethereum has been going, and this is probably a large reason for their price rise recently, is that essentially he's been buying it up. Now he's the big Ethereum classic guy, but it seems that he's preparing for proof of stake. So that way he'll have a large enough vote. Maybe he can, throw his weight around when that happens. All right. I did a couple of shows last week. You already know about my books. Let's go to my Twitter feed. This is the part of my show where I talk about my tweets and try to explain some of them if you didn't get it, or talk about which ones were popular and so on. All right. So here is, you have to understand, most of these people are not ready to be unplugged, and many of them are so inured, so hopelessly dependent on the system that they will fight to protect it. That's a quote from The Matrix. And my point here was, be kind to no-coiners, because it's really hard to accept the truth that Bitcoin is the cure. They really are very much, inside the system, and until they've stepped outside, they really don't understand how corrupt the system is. And it might be very obvious to you, but my point is, you need to understand where they're coming from, which is that they really don't know, and that and you need to get them out. I finished this book, Propaganda. I consider propaganda, along with fiat money, as the dominant influences throughout the world for the past 100 years. So if you haven't read the book, it's a little bit hard to read. It's the guy's a French philosopher, and it got translated to English, but oh my goodness, it is an amazing book. Explains a lot about propaganda and how it works, and how it's been used essentially as a way to subvert democracy, for one, but in many ways just get people to follow whatever the heck the propagandists want. And it's not necessarily about getting people to believe a lie. A lot of propaganda is based on truth. It's just focusing it in such a way as to push people in a certain direction, and most people are not aware of the propaganda that's going on. And this includes everything, including news, movies, almost all information sources. A lot of the people that you meet and talk about things with. It's where things come from. Excellent book. All right, after the next bull run, the question every LP will ask: why is the fund indexed against the dollar? Bitcoin is going to eat the investment world. The fact of the matter is, right now, every fund runs on the dollar, right? Like, their baseline is the dollar. It's however much you invested and however much you committed to. But what's going to happen soon is, and this is how VCs get paid. It's usually 2% management fee, 30%, 20% carry, something like that. 2 and 20 is what they call it. But that 2 and 20 is based off of the baseline of the dollar. And every LP is going to be like, nah, I think we should be based off of Bitcoin, because they can put money into Bitcoin, and Bitcoin is going to become the standard because it's available to absolutely everybody. You don't need to be an insider in order to get in on that deal. In Bitcoin, you get to decide what is and isn't essential. It's been annoying the heck out of me how the government gets to decide that one service is essential, like liquor stores. I don't get why they're essential, and one service isn't. And that includes religious services or whatever. It's the nice thing about Bitcoin is you get to decide. It takes 6 months to 2 years to get someone to change their core belief. Don't despair. The little bit that you're doing to convince people of the value of Bitcoin is having an effect. But like everything in Bitcoin, you're going to have a low time preference to see it paid off. So that's something I learned from propaganda. Is one of the biggest propaganda things that in history was the Chinese Communist Party. And what they would do is take U.S. soldiers and basically propagandize them. And they reported it took 6 to 24 months before they could really convert them. And it was a really slow process. And they couldn't do it for that many soldiers because it required just so many personnel, a lot of people that knew what they were doing, that were trained in propaganda and so on. But that's how long it takes for people that are essentially trapped. So it's going to take at least that long, with something like Bitcoin to convince people. What's scary is that we're still in the gradually phase, and that's definitely true. We're definitely in the gradually phase. We're not in the suddenly phase yet, and not by a long shot. But when that happens, it's going to be insane, and we're going to see some crazy things happen. I don't know what those things are yet, but we're not going to necessarily be able to predict it. I did read through a Cypherpunks Manifesto by Eric Hughes. Encourage you to watch that video. It's a very good paper. They did ban it for a little bit, but they brought it back. Nothing is priced in. Things are only anticipated, correctly or incorrectly. As accurate anticipation is difficult, prices generally do not stay static. And this is just sort of an annoying meme that the halving is priced in or something like that. Nothing is ever priced in. It's either accurately predicted or not accurately predicted. And accurate prediction is extremely difficult, as anyone can tell you. And the market is very, very wrong oftentimes, and this is why you have price fluctuations even on a day-to-day basis. So, including the halving, nothing's priced in. Most people, when they introduce Bitcoin to someone who's interested, end up giving a little bit of Bitcoin to them for free. I suspect it would work better if you sold them $5 worth instead. And this is, a takeoff of what their Gigi was saying, which is to get them to stack sats. Once you get skin in the game, once you take action, it's a lot easier to plunge yourself into that world. And this is one of the things I learned from that book, is that what propaganda does isn't to get you to believe something different. It's to get you to take action. And once you've taken action in any direction, you will justify it or rationalize it. And that's generally how belief tends to work for most people, and not the other way around, which is rational thinking leading to a particular action. It's usually action first and then you justifying it afterwards. One thing this lockdown has made me appreciate is real human interaction. Digital versions are poor substitutes, kind of like sound money versus fiat. So sound money is real human interaction. Digital, digital interaction is really kind of like fiat. It's just not that satisfactory. Here's to everyone who bought the dip the last couple of months. Congrats, because you are doing fantastic. Emotions from no coiner friends and family to expect over the next 12 to 18 months. Ridicule, anger, envy, one-upmanship. That is, they're going to invest in alts. Pleas for help, acceptance, enthusiasm. Depends on your friends and family, but these are all emotions that you should expect over the next 12 to 18 months, because I am expecting some sort of some sort of boom part of the boom bust cycle. There are two schools of thought. Accelerationists, let the money printer go brr. That was auto-corrected by my phone. So the dollar hegemony can end faster. Transitionists, minimize the complete destruction of people's savings and give people a chance to convert to Bitcoin on their own first. Which are you? Now, the accelerationist point of view is let's usher in the Bitcoin era sooner, and that means like you should encourage government spending all over the place. Transitionist is much more minimize the complete destruction of civilization in the process, and that might take longer, but at least less people get hurt. Most people seem to be transitionist, but I think there's a good argument to be made that we're going to go into an accelerationist mode anyway. All right, so 8 weeks ago, masks are useless, not enough ventilators, hospitals will be overrun, lockdown until flattened curve. Now, must wear masks, stop using ventilators, hospitals near empty, lockdown until vaccine. Most popular tweet this week, and it got retweeted by all sorts of people. I'm just pointing out that the experts, quote unquote, don't know anything. Nobody knows anything. And what they told you 8 weeks ago, I mean, these are just select statements, and I cherry picked them, obviously, but they're clearly wrong. And what are they saying now that will be wrong 8 weeks from now? That's the question that you have to ask yourself. So don't just trust, verify, right? Like, think for yourself. It's very important. How much USD paid now would you require to be locked down until July? I'm told that this is already happening in Oregon. They're locked down until like July 5th or something, which is, I guess, a day after 4th of July as a way to keep people home during that celebration. But the idea being, I mean, we might be locked down until then, or at least some people. I mean, Texas is starting to open up, but there are lots of places all around the world that are being locked down until then. So how much money would you have to be paid in order to do that? That's the question. Bitcoin is herd immunity against the dollar hegemony, and this is absolutely true. We are gaining immunity from the dollar as a result of Bitcoin. Like Iraq and weapons of mass destruction, many are invested in more death and destruction so they can say they were right in reacting how they did. Your position from 8 weeks ago doesn't define who you are. Take the L and move on. And this is something that I'm seeing a lot is people hoping in some weird way that they could be proven right. They're looking for more evidence of death, things being worse than they are as a way to justify their overreaction. I mean, we all didn't know anything 8 weeks ago, including the experts. I just showed you a tweet that said that. It's okay to say that you were wrong. A lot of people are so invested in being right that they want reality to change around their opinions and not the other way around. And that's just a very unhealthy mindset. That's all I'm pointing out. As long as the matrix exists, the human race will never be free. We are enslaved by fiat money. That's obviously from Morpheus in the Matrix. Bitcoin is our path to freedom. Fiat money, this is why I say fiat delenda est at the end of every show, is because it needs to be destroyed. And, however it gets destroyed, whether slowly or quickly, nobody will really be free until that happens, because we are all slaves to this money. Everyone around the world is a slave to the dollar. Sunday survey, how long do you think the economic downturn will be? Very few people thought that there would be no downturn at all. Turns out most people think it's somewhere between 13 to 36 months. Significant number think it'll last more than 3 years, which is a little bit scary. But that may be the case. Bitcoin is the first money in the world where anyone can not only verify its scarcity now, but verify its scarcity in the future. In a world of uncertainty, Bitcoin is certain. And this is what makes Bitcoin a great money, is because it is certain. It's a way to measure everything else. And money is really, if nothing else, a way to measure the value of other things. And that's what makes Bitcoin so good, is that you can see the changes instead of having goods be static in price or be the standard, which is what CPI does. It makes something else like money. That way, it's a lot easier to see changes. All right, Fossey 7 weeks ago, cruises are fine if you're healthy. Fossey now, don't open up states yet. De Blasio 10 weeks ago, visit Chinatown, please. De Blasio now, still months away from reopening. Yeah, I mean, politicians are probably the worst at predicting or knowing what the heck they're talking about. These two people were obviously wrong, and that's what I'm pointing out. Don't tell friends how much Bitcoin you have other than the obvious reason that it protects your privacy. You're protecting the other person. Envy is real and ruins a lot of relationships. And this is my advice to you if you own Bitcoin. No matter how much you have, even with other Bitcoin friends, don't tell them how much you have, because either they're going to have more than you and you're going to be envious of them, or you're going to have more than them and they're going to be envious of you. It ruins a lot of relationships. There's, reason why lottery winners, all their relationships get wrecked. Next 6 months, lots of lawsuits, unemployment and populist anger, scapegoating, inevitable overreaction by politicians, more regulation, more spending, more burr. All of this is good for Bitcoin. And I'm told that there's already lawsuits against colleges in particular, because they're like, well, I didn't pay for this. Why should I pay full tuition when I'm not getting I'm getting classes online and stuff like that. But I mean, I'm talking about other stuff like, okay, you ruined my business. You need to compensate me, or you shut down my business illegally. I need to be compensated. There's going to be so many lawsuits. There's already a lot of unemployment. The populist anger will really, really start once the lockdown is over and people can congregate and stuff like that. There's going to be a ton of scapegoating. It's this person's fault. It's this person's fault. It's that we're in this mess. Populist anger doesn't go away unless it has a very good target, and a virus is not a very good target. It's going to be actual people, and that's what's going to happen. Probably will define this election as well. Inevitable overreaction by politicians. They're probably gonna swing in the other direction, probably a little too much. More regulation. I mean, if inflation starts, I'm going to guess that there's going to be price controls and wage controls and things like that. Probably not in the United States, but I can see this happening in other parts of the world. More spending, that's already happening, right? Like trillions of dollars. More burr, that's already happening, probably trillions of dollars. All this is good for Bitcoin. All right, so let's move on to our long read. But before I do that, let me see if there are any questions. All right, when will we see a Jimmy Song Ben Askren interview? I mean, I'm not as good of an interviewer, and as much as I am a fan of Ben Askren, and I'd love to have a conversation with him just about MMA and Bitcoin and stuff like that. I don't know if that would be necessarily something that would be worth watching. I don't know, or that I would be able to get that you guys would get something out of. I mean, I'm sure you guys would love to see Ben talking about Bitcoin, but there are a lot of other people that are, I think, much better interviewers than I am, like Stephen Lavera or Peter McCormick or others that can get to it a lot better. All right. Let's see. Functional democracy. It's very difficult in an age of propaganda. Why add a second attack surface to an already secure coin? This talking about, I guess somebody's arguing about privacy. All right. Well, all right. Some people are arguing in the chat. All right. Let's get to the stock to flow cross asset model. This is from Plan B, or 100 trillion USD. The important thing in science is not so much to obtain new facts as to discover new ways of thinking about it. William Lawrence Bragg. Introduction. Bitcoin stock to flow model was published March 2019. The original BTC S2F model is a formula based on monthly S2F and stock and price data. Since the data points are indexed in time order, it is a time series model. This model has activated quantitative analysis around the world. Activated quantitative analysts around the world. Many have verified the non-spurious relationship between stock to flow and Bitcoin price. And you can see this. We, by the way, are in that very last stop before this. I think the last difficulty adjustment before that literally happens like today. If you are not familiar with the stock-to-flow model, I highly recommend reading the original article because it explains background and terminology. In this article, I solidify the basis of the current S2F model by removing time and adding other assets, silver and gold, to the model. I call this new model the Bitcoin stock-to-flow cross-asset model, S2FX model. The S2FX model enables valuation of different assets like silver, gold, and Bitcoin with one formula. All right, sounds interesting. And basically, it's going to add other assets, so we'll see where on the spectrum they are. First, I will describe the concept of phase transitions. Because it introduces a new way of thinking about Bitcoin and stock-to-flow, it explains why stock-to-flow cross-asset model is important. Second, I will describe the S2FX model, how it works, and what the results mean. All right, so let's talk about phase transitions. Phase transitions are an important perspective in understanding S2FX model. During phase transitions, things get totally different properties. Transitions are often discontinuous. 3 examples of phase transitions are water, US dollar, Bitcoin. All right, so let's talk about water. The classic example of phase transitions is water. Water exists in 4 different phases: states: solid, liquid, gas, ionized. It is all water, but water has totally different properties in each phase. So ice, water, steam, and then ionized water. The US dollar. Phase transitions are also present in finance. For example, the US dollar has transitioned from gold coins, $1 equals 371.25 grains of pure silver, equals 24 grains of gold, to paperback gold and gold coin payable to the bearer on demand, to paperback by nothing. This note is legal tender for all debts, public and private. Although we keep calling it dollar, the dollar has totally different properties in these 3 phases. And this is a gold dollar, this is a gold backed dollar, and this is dollar backed by nothing. The same is true for Bitcoin. Nick Carter and Hasu show in their 2018 study how Bitcoin narratives have changed over time. These Bitcoin narratives seem very continuous in the chart. However, if we combine the narratives with financial milestones and later S2F and price data, they look very much like phases with more abrupt transitions. Proof of concept to which was after the Bitcoin white paper, payments after US dollar parity, e-gold after first halving, almost gold parity, financial asset after second halving, 1 billion transactions per day milestone, legal clarity in Japan and Australia, futures market at CME and back. These 3 examples of phase transitions in water, dollar, and Bitcoin offer a new perspective on Bitcoin and stock-to-flow. It is important to not only think in terms of continuous time series, but also in phases with abrupt transitions. In developing S2FX model, I see Bitcoin in each phase as a new asset with totally different properties. A logical next step is identifying and quantifying Bitcoin phase transitions. All right, so he's working up to the entire idea of phase transitions and Bitcoin. The chart below shows the monthly Bitcoin stock-to-flow and price data points used in the original stock-to-flow model. One can visually identify 4 clusters. All right, so you see a few clusters, and this is where it kind of got out of whack, but it went over there. And I tend to think of these as sort of like magnet points, or where it sort of clusters. These 4 clusters could indeed indicate phase transitions. Quantifying these clusters can be done by minimizing distance between the monthly BTC data and clusters. I use a genetic algorithm, minimizing absolute distance, to quantify 4 clusters. The future research could focus on different clustering algorithms, k-means algorithms. So these are the 4 places where it's the most clustered. Each of these 4 identified BTC clusters has a very different S2F market value value combination that seems to be consistent with halvings and changing BTC narratives. Proof of concept is the first one. I think this is the least convincing cluster here, because it's not really a cluster, it's just sort of like an average there. But proof of concept, there may be like lots of mini proof of concepts in there. Payments, and this is another transition when it got out of whack over here, and then it clustered back here. That's definitely an area there. E-gold, and this is where, this stock to flow at 1.3, at 3.3. This one's at 10.2, market value of 5.6 billion. This is the cluster there. Financial asset S2F of 25.1 and a value of 114 billion. Like water and US dollar, these 4 BTC clusters represent 4 different assets, each with different narrative and characteristics. BTC proof of concept with S2F 1.3 and only $1 million market value is a totally different asset than BTC financial asset with S2F 25 and 114 billion market value. With the phase transition perspective of Bitcoin clusters as different assets, I can now add other assets like silver and gold to the model. This makes it a real cross-asset model. For silver and gold, I use stock-to-flow numbers from the recent analysis by Jan Nieuwenhuis and Ultimo, December 2019 prices from TradingView. So silver was at 33 and gold was at 58. So these are, these obviously have different properties, but they seem to be clustering at those points. And these more or less lie in the same line, which is kind of amazing. The chart shows 4 quantified BTC clusters plus the original Bitcoin monthly data for context, silver and gold. They form a perfect straight line. I use regression analysis to make the S2FX model. Note that a big difference with the original S2F model is that I use silver and gold S2F and market value data in the regression analysis. The S2FX model shows a significant relationship between S2F and market value of these 6 assets. Low p-values, f-test, and low p-value coefficients with a perfect fit, 99.7% R2. The S2FX model formula can be used to estimate the market value of the next Bitcoin phase cluster. Bitcoin S2F will be 56 in 2020-2024. Market value will be $5.5 trillion. This translates into a Bitcoin price given 19 million Bitcoin in 2020 to 2024 of $288,000. Now, this assumes that there is some sort of demand at that particular S2F. Now, I believe there is, but it very well might not be, and there might not be one until we reach 112, which I think is 2025. But who knows? All right, that's the big thing that we have to find out and do more research on. Bitcoin price forecast is significantly higher than the 55,000 in the original study. Please be aware that the S2FX model is a first step that has not yet been replicated and reviewed by others. Although 6 observations is low, nevertheless, I value the results of the S2FX model relevant. I see S2FX model as a working hypothesis like S2F model. Future research could focus on adding more assets to the analysis. However, most assets have low S2F values and are therefore not interesting. On the contrary, diamonds have a high S2F but have a very complex valuation, rough cut, carats, different colors, brightness, etc. S2FX model allows for interpolation instead of extrapolation in the original S2F model. The original S2F model makes a forecast that falls outside the date range used in making the model. The new S2FX model makes a forecast that falls within the data range used in deriving the formula, and this means that it has, maybe it's more accurate. It's hard to tell. In this conclusion, in this article, I solidify the basis of the current S2F model by removing time and adding other assets, silver and gold, to the model. I call this new model the Bitcoin stock-to-flow cross-asset model, S2FX. S2FX enables valuation of different assets like silver, gold, and Bitcoin in one formula. I have explained the concept of phase transitions. Phase transitions introduce a new way of thinking of Bitcoin and S2F. Led me to the S2FX model. S2FX model formula has a perfect fit to the data. S2FX model estimates the market value of the next Bitcoin phase cluster of $5.5 trillion. This translates into a Bitcoin price of $288,000. Solidifying known facts about the original S2F study, the S2FX model offers a new way of thinking about Bitcoin transitioning into the 5th phase. All right, so read through it. Here are the things that I'm not so sure about. I don't think this first phase really exists, and I don't think the data supports it either, because it's a scatter plot here, and the average ends up being around here, but I don't know if all of these data points really belong with that cluster. The fourth one has a nice cluster, but I'm not sure financial asset is the right narrative or the label to put there. I'm not even sure payments or e-gold are it. I think digital gold at some point quantifies itself, or belongs here somewhere. But these are phase transitions. It might be sort of like the level of comfort people have, or the willingness of people, or like personality differences or something like that, or some other stepwise function that causes this. But I'm not sure I believe in these correlating to these. So that's my one criticism, but otherwise it's very good. I would love to see other assets, but Plan B is pointing out, there really aren't that many assets that are out there, which is optimistic for Bitcoin, because if there aren't that many assets that are past this stock to flow, well, what does that mean? That means that there's probably a lot more demand for it, but it hasn't been able to be satisfied because there just simply aren't many things in that area. So could it go past gold? Absolutely, because it's an asset that has better properties than gold, and from a stock to flow perspective is rarer and scarcer. All right, so I think that's about it. Let's see if there are any other questions. I don't think so. Oh, wait, there is one. Thoughts on hash rate increasing into halving, and what is your expected % drop post? Can't be worse than BCH. Yeah, Bitcoin leads it, and miners, they might turn off machines, but generally, what happens with mining equipment is that in order to get the absolute cheapest electricity rates, you have to contract out months ahead of time. Now, they might have anticipated this and had their contract renewable maybe like a few weeks after the halving or something like that. But at least that's what I would do. I wouldn't want to make the decision like a week before the halving. But so I think it'll be more gradual than people think. It probably won't be so sudden. But yeah, I suspect it'll have some effect, but price might compensate them, or it might be profitable for them to continue running it. So it's really hard to tell. Generally, it's got in previous halvings, hash rate has tended to go up along with even past the halving. So we'll see what happens. Anyway, that's about it for today's show. Fiat delenda est. This song is done.